Here we go, dollar Swedish krona. So yeah, I'm starting with this chart, and we looked at it last week, but I'm starting, with this for a reason because it is super important. So one of the posts I wrote last week, the theme was to keep an open mind. Okay. Well, this is let's call it the life of currency cross channel, if we will, right? So it's based on a trend line that starts back in 1975. All right, we crossed lows in the late 70s, the early 80s, 2008, getting a little closer to home, 2011. And if we look at the center line of that channel, or the median line, you can see that we have some pretty important price action that occurs around it. So the big high back in December 2016, right? And we got bearish on the dollar generally because we hit it again last week. All right. Now, here's the thing. I don't pretend to know what's going to happen. I'm bearish into this level because it's resistance, right? A level's a level until it's not. Resistance is resistance until broken, support until broken. And then you look for the alternate, the opposite to happen. So my point being is that we hit a massive, massive resistance level and we're coming off of it, coming off hard. If, however, we were to break this level, that would be, one, would be probably pretty scary for every other asset class, but you'd have to be extremely bullish dollar SEK and, by extension, probably the dollar in general. So let's go a little shorter term here. Let's go to a daily chart. All right. So this is the daily chart, and this is the fork, for those of you that think I'm talking about dining where I'm not. I'm talking about Pitchfork, which is a tool, a channeling tool used in technical analysis. And this fork, right, has nailed pretty much every pivot over the last roughly a year, okay, save for this little piece here in October, November of 2021. And you can see that we hit the top of that parallel, right? Reversed. And today's action is really important. So we have FOMC today, but we've already cracked this. So if we were to crack this, on a closing basis, that'd be extremely important. And here's why. You can see, look at how precise all these resistance levels were, right? Right there, right there, right there, right? Even the other day, 2 days ago, we reversed off of it and bounced. So what I'm saying is, if you're watching this and FOMC has not happened yet, watch yesterday's low, okay, for resistance if we do get a dollar bounce on FOMC. And I'm going to go into a 4-hour chart here just so you can see how precise and clean that resistance level was. So this really is the essence of technical analysis right here, right? Levels, support and resistance. Former resistance becomes support, right? And once broken, that support becomes resistance, that resistance becomes support. So most people do think about, when they're looking at charts, they think about support resistance, like you have resistance, support, market goes like this, right? Doesn't really work that way. Usually markets trade on a plane, whether that's an uptrend or a downtrend, and they go like this, right? Sometimes you get that horizontal range, but most of the time you don't. I mean, think about it. How often do you see just a market trading in a straight flat plane for an extended period of time? So this to me is a very useful chart to pay attention to. Very timely right now, and then that longer term chart we looked at before. So again, pay attention to this today with FOMC. Resistance up here, let's call it 955, 956. And then your big level to pay attention to on the downside, going to be this lower parallel, which is pretty much in line with these former highs here, right? And that's really when it, when it all comes together, when you have what we call a parallel support or resistance on an angle along with a horizontal level, right? Former highs and former lows. Okay,